Good morning, everyone. Welcome to the modern market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, the stock market, and the metals market, with the hope to make some or a lot of money on the internet, or at least not lose it all. Unfortunately, today is another red day, and it's continuing to go further red as we speak. So we'll discuss everything that we need to know again today. Hopefully we're already well positioned, because sometimes there's not much that you can do on days like this if you're out of position, but we'll talk about positioning and where we think the blood will stop, if it will. First, Bitcoin is down to 71K and crypto falls again as stocks sell off too. And as we speak, Bitcoin's gone low now to 70.1. Tether is also scaling back its 15 to 20 bill fundraising in favor of a smaller $5 billion raise after investor pushback at 500 bill, according to the Financial Times. And then finally, prominent investor Kyle Samani steps down from Multicoin Capital as a lot of crypto talent seems to be heading for the exit door as the prices decline. Is that worrying? Is that okay? Is that just what happens towards the end of a cycle? We'll discuss there and see whether there's anything to be optimistic about in that respect. So that's what we're going to talk about today. As usual, we've got market thoughts and ideas coming up as well. I've got Legendary in the co-host seat with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We don't know anything for sure, unfortunately. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 5th of February. How are you doing?
GM, quickly checking if you can hear me well, because I'm seeing that my upload seems to be struggling a bit, but am I coming through fine?
Yep, we got you. We got you well.
Wonderful. At least something good going on in the market. I'm doing well. Obviously, if I look at CoinMarketCap and I see that we are retracing all the way back to the old all-time high, Fear and Greed index being at 11. 11 is really, really bad. Haven't seen that in a long while. Makes me think where the market will bottom. I think the 70 to 80K range for Bitcoin is a bit of no man's land. Like, we are not strong enough to push back and clearly reclaim a position above the old 69K all-time high, but we're also like too close to the old all-time high to just sit there. So I feel like there will be a decisive move if we're gonna move lower or higher. And my gut is feeling lower at the moment, especially with how bad the sentiment is. And also some of the correction that we've seen in tech stocks is not really favorable for crypto. So that is my current feeling of the market, plus the intense amount of volatility that we're seeing in commodities and also the tech stocks, quite frankly. So that is not something that makes me excited to be a trader right now.
Yeah, it's not fun. It's not fun, is it? I think one of the things I've been thinking is, even though, and like all things considered, we're pretty well positioned for this, right? Like, I think I'm almost, and have been almost 70% cash for a while. Managed to build up to around 10% gold, 10% crypto, primarily Bitcoin. And interestingly, I realized I've got like 10% art, which is maybe overweight art. But fortunately, it's not like necessarily, well, some of it's NFT stuff, but some of it's real art as well. So I'm kind of, I get a feeling maybe that will actually hold up quite well. I mean, maybe if I'd literally tried to sell it, it would go down, but kind of comfy in that, because there's no price that's constantly trading in front of the market telling you that your art is worth loads less. And I'm pretty confident in the artists that I've invested in and purchased too. So I think that's one part. But even still, it still gets to you at some point, right? Like, seeing the bleed out of the portfolio, even on those ends that, you know, you're fairly protected, but you're still exposed. And to be fair, maybe I do have 10% stocks as well now, because I don't monitor that too closely. But it's annoying. It's getting to the point now where, okay, fine, we were kind of right to de-risk over the summer when we saw that stuff, but I'm still getting annoyed now. What do you do when you start getting annoyed in that way? Do you know what I mean when I'm saying that? Like it's just annoying to see the market bleed. Like you just want it to be over. But how do you behave when you notice yourself feeling that way? What's the way to cope?
Probably just, I mean, it sounds a bit stupid, but probably just find something else to do. I guess if you don't want to trade the market, then don't stare at the charts all day. Stare at the charts only if you want to trade it. And there's plenty of things to do right now that are like crypto adjacent. Obviously, the Maltbot Open Claudebot arc, vibe coding arc is the one that got me interested. And what I've actually been thinking, what is a fun experience plus a money making opportunity, is to make use of all these hackathons. Circle has their own hackathon going on Maltbook for 30K. I think Monad has a 200K hackathon. So just learn to use agents and participate in those things, and maybe you might win something there. I did submit, by the way, for the Circle one. I thought I came up
Oh,
with, I'll post later about that. It's my first GitHub that I've ever published, or my agent published.
interesting.
I think it's a fun one. I created a game basically where agents can go against other agents and they try to prompt inject one another. So basically, if you are the defending agent, you can say, I bet 100 USDC that nobody can get me to say I surrender. And then
Yeah.
other agents can match your bet and try to prompt inject you and attack you. And if they win, they obviously win. Like they also have to stake that amount of USDC, and if they win, they will win the bet and take your $100 or take your agent's $100. And if your agent manages to defend against the prompt injection, he wins, or she or it, or whatever, they win the stake of the attacking agent. So it's a little game for board agents to play amongst themselves.
That's pretty cool. That's pretty cool. So yeah, there's obviously interesting stuff going on that side. I think ultimately you're very, very right. And one thing that I'm noticing, and we were like, again, always trying to reflect on how we can do better, even if you're well positioned at some point. Remember, like 2 weeks ago, I came in and basically we've sat on our hands for a long time. Legendary completely logged off, was very uh, apathetic towards the market for a long time, which is the right thing to do. I, on the other hand, have been experimenting more on the equity perp side, been on Trade XYZ, been on Ostium, and experimenting there, which I think there's money to be made there as a equity perp trader. Of course, it's on the more dangerous side. You can lose money as well. So I was a bit more active on that side, but the temptation is to try to catch the falling knife, and I did that. I don't know if I was trying to catch the knife. I was just trying to get too experimental, doing this hype and Bitcoin LP where I bought a ton of both, and it was just too soon. Like, it was too soon. It's not necessary. Again, I exercise one of my classic things now, where if I think that I've made a mistake, I cut quick. So yes, I lost some money, but I mean, I would have been down way more. Um, Actually, maybe maybe the hype pump would have cancelled it out. I don't know. Um, but yeah, I think these things take place over a much longer time frame. The concerning thing, maybe, Ledge, is the stock market, but maybe we're going to talk about that in a moment, because um, the question I asked in our Telegram chat the other day, which we started reflecting on, was, damn, if stocks are still super high and now they've started to come down, but if stocks dip 10% from here, where does the stuff go? Like, crypto seemed to be front running in a bit. So did you have a reflection there? Should we save that conversation for a moment? What's your quick reflection before we get into the main stuff?
Let's save it for a moment because I have some Anthropic news that connects to that, and it's kind of feeding into my thesis what might be going on the stock market and why we've seen a bit more tech volatility that's also impacting us in crypto.
Perfect. Okay, so let's get to the roundup. Get up to speed with everything that you need to know first. Then we will get into that bigger conversation about how the rest of the markets are just not playing ball at the moment, and it's really, really hard market to play. Everything is going down. So starting with the price action, as always, we have Bitcoin down 8%. We've just hit 69K, guys. I'm going to do the thing when I'm in disbelief. I'm just going to refresh. I don't know what I'm expecting. I'm not expecting it to be 75. Am I expecting it to be lower, the same, or whatever? That does not look great. So down 8%, 69.9K. ETH is down 8% to 2,000. just under 2,100 as well. BNB is down 9% to $681. Sol is down 6% to $90 now. We have HyperLiquid also now down 3% to 32, but down 1% on the week, which is pretty damn strong considering Bitcoin's down 20% on the week. ETH is down almost 30% on the week. Sol is down 26% on the week. So incredible strength from HyperLiquid still. My thought, I don't know if it can defy this gravity. It's not scientifically proven that hype can defy gravity, even though it is, it is at the moment. Doge is down 8%. Pepe is down 7%. Again, I've said this a few times. I'm in disbelief that these meme coins are down no more than the majors. I don't understand. Pengu is down 9% when Bitcoin is down 8%. I don't get it. I definitely want your reflection on that, Ledge, in a second. Or anyone in the comments, like, explain to me what's going on there. Why is that making sense? Whether it's in the Telegram chat, in the YouTube chat, in the Twitter comments, tell me what is going on. Haven't dwelt on it. I need to know the answer. SPX is down 5% when Bitcoin's down 7%. Fartcoin's down 7% also. Okay, so red day across the board, but memes not as down bad as, or no worse than the majors, I guess, is what I'm trying to say. Getting into the headlines that we're going to talk about, obviously Bitcoin's down, crypto's fallen again as stocks have started to sell off too. Legendary is going to take us through that in a moment. We got Tether scaling back. Maybe this is a sign of the times. Its aspirations for a $15 to $20 billion fundraise in favor of a smaller $5 billion raise after investor pushback at a $500 billion valuation, according to the Financial Times. And finally, prominent investor Kyle Samani steps down from Multicoin Capital and is leaving crypto, along with a bunch of prominent crypto personalities, hires that have decided to leave the industry in the last few days, which we will talk about as the talent some talent is leaving crypto. Some notable price action. Hype's up 4%. Well, it's just down a touch now to 33. In terms of other news that you need to know, the US House has launched an investigation into World Liberty, the $500 million deal with the Abu Dhabi entity. We spoke about that a couple of days ago. I don't think that's going away, guys. I think that is the Democrats are going to have a field day with that deal, right or wrong, no matter what the actual mechanics of it. People are going to really, that is not going to go away. So further investigation there. It seems Binance buys another $100 million of Bitcoin from the fund. Pay announces first ETH. I think they said they've got $1 billion to allocate to. Gosh, was it $1 billion they've got to allocate to Bitcoin? I think that was the case. So that's another $100 million bought. Pay announces the first ETH L2 with privacy built in. That is one of the types of L2s Vitalik said could be useful instead of all of the copy paste L2s that have gone on so far. Rainbow's wallet, Rainbow airdrop, is scheduled for later today. What a tough day to come to market, but let's see how that performs. Circle, as Legendary already said, is putting up $30,000 worth of prizes for its AI hackathon. Ripple adds HyperLiquid to its prime brokerage platform in its first DeFi integration. Cyberkong's team have launched, will launch Death Star, the token using the TokenWorks model to support different NFT projects after different periods of time. The way it works is you support one project, then holders vote to change projects and pick another project. I don't know why that would be something that people want to do necessarily. DAO governance is already pretty difficult. I'm not sure what the objective is there. Personally, Coinbase announced Dude listing for Doodles. People are still saying, when is Hype going to be listed? And finally, Prediction Market Opinion announces the completion of a $20 million Series A funding round. Still a lot of demand for prediction markets or variations of prediction markets and general speculative gambling products. So that is the headline today. That is what we are going to be discussing in a moment. Before we get into the main stuff, going to go to Legendary to hear what's catching his attention. But just before we do that, quick shout out to our partners at Yeet for today. Today's show is sponsored by Yeet, the crypto casino that has done more than $1 billion of volume in less than a year, founded by trusted names like Mando, KBM, and pro poker player Ben Lam. We do normally do this sponsorship on a Friday. We actually don't have a show running tomorrow. We are taking the day for a company day. So we will do the sponsorship today. We'll tell you what you need to know about Yeet. Remind you that if you'd like to sign up, you can at our affiliate link, because we give away $500 to someone randomly who has used our affiliate link every single week, every Friday. So if you want to do that, you can join in the Twitter comments or in the YouTube comments, wherever you're reading. Legendary will put the link there. And we'll do the giveaway tomorrow. We'll do the giveaway tomorrow, but it will be in our Telegram. We'll do the spin and we'll let people know who the winners are. And if we can't identify you from the Telegram, we'll announce it again on Monday or whatever needs to be the case. But we thought we didn't want to run it today because it's one day less and that's what people expected. So sponsorships today, giveaways tomorrow as usual. Shout out to Yeet for partnering with us to help us give away $500 each week for that. So Legendary will share a few more details later in the show. But let's get into the main stuff today then, Ledge. What's catching your attention before we get into the main headlines?
Nothing really from the snapshot. There's something outside of it that I want to touch on, but you also asked the question, what's going on with price action, seemingly meme coins kind of defying a bit the trend of the majors going down, but also individual pockets of strength with HyperLiquid. How long can HyperLiquid keep it up as BTC and ETH are falling? Even some of the new TGEs, honestly impressed that Tria is holding, for example, above 200 mil quite strongly, trading at 220 or so, and did not go down with ETH going down. And I wonder if this is a broader correction where we could see some strength and where we could maybe see some tokens being a bit more resilient. And DC Investor had this post on that, which I find quite interesting. Let me get up on screen. DC was saying, if crypto mostly dies, quote unquote, as an industry, but public blockchains live on a censorship-resistant money, collateral, and other censorship-resistant digital assets, decentralized finance, global decentralized trust layer, global settlement layer, I will shed tears of joy. And the thing that I would probably add to that is part of the settlement layer is also settling prediction markets. But if we now strip away all of the other things, then probably something like Hype, probably some of the on-chain perps, some of the banking things, some of the privacy things and prediction market tokens that are still to come will have a chance to hold up a fair value because they're so strongly tied to real life businesses. So this part I would understand. I would understand if Hype keeps on holding up pretty strongly against the rest of the market. The question that I cannot answer is why memes are not crashing completely. I have no clue, but curious to see if you have a thesis or a thought on that.
I don't know. A guy in the Telegram chat has said, perhaps memes just don't have that many derivatives, referencing the post above. I'm not sure which post that was, but do memes have enough? I mean, again, sorry, Guy, if I'm misrepresenting what you're saying and applying it to this. I mean, there's so many memes that you could, maybe memes, the capital in memes is so dispersed already. Maybe I'm reading into what Guy's saying, but maybe the capital is so dispersed across so many things already. There might not be one humongous outflow because people are already dispersed around so many different things. Like if there's X amount of capital available in the industry and it's all, at least there's a humongous portion in Bitcoin, right? Like everyone, at least they're supposed to, although I don't think this is true. Everyone has some proportion of Bitcoin, and certainly the bigger holders do. But when that means the market turns, even if it's the most solid thing, everyone's got some Bitcoin to sell, is my point. Whereas I actually don't I don't think you'd call Rect a meme, but I'm still a Rect holder. Beyond Rect, and I can't remember some other, I'm not sure. But my point is this about on the meme coin side of things, on the more speculative alts, I would have to think really hard for what I even own because it's not a significant part of the portfolio. And so maybe but thinking about it through that lens, I don't know if people even hold enough of them to be able to initiate humongous drawdowns like they did, because maybe people are out of them. This is just me like trying to come up with an idea. I don't know if that's accurate or not. What do you think about that idea?
Yeah, that is kind of resonating with what some people are saying in the YouTube comments. Let's go through them. Tone World is exactly saying the same. People don't hold a large amount of memes post October 10th, so
Yeah.
there's less sold.
Whereas people have got Bitcoin to sell, right? You've got some to sell. You've still got ETH to sell. Maybe some people still have Sol to sell. I'll do some connection in a second for a scary thing for you guys, but keep going first, Ledge.
Some are being held up by wallets that aren't active, is a Tone World's thought on that. VX Crypto is a bit more pragmatic, saying memes are already down 98.
Yeah, exactly. Like if you wanted to sell, you're already out, right? That's kind of my point. Like they've got nowhere left to go because you don't have any left to sell. You've already got rid of it. Ray, shout out to Ray in the Telegram as well, saying people still in these meme coins have pretty much lost faith elsewhere. I think that's fair. And DK in the chat as well, in the Telegram chat, if the underlying token ETH or Sol value is 0, then the meme coin has to be worth more than that. Okay, yeah. Okay, yeah, I mean, there's some memetic value to the memes, whereas Vitalik just told us all the L1s and L2s are not worth anything. So, okay, so those are some ideas. One dangerous, consequential piece of thinking, Ledge, that is going to make everyone feel sick, I'm sure, is if you're thinking along these lines, right? And you're thinking, okay, well, the reason why some things are going down less is because there's no one left to sell them because they're completely exhausted. Of course, they're already down 98%, but the point is that the reason why they're down 98% is because people have exited so much and there's just less instinct there left to get out. Do you know what is something that people do have a lot to sell?
Gold, silver, stocks.
Hype. People have a lot of hype to sell. I would suspect. I think I don't know how hype is doing this defying of gravity at the moment. It's doing an unbelievable job of defying gravity. I think there was this rumor. So MLM, who if you follow HyperLiquid and you're in MLM's Telegram, does an amazing job of covering all things Hyperliquid, all the wallet movements, all the buys, all the sells, all the liquidations, all of this stuff. Really incredible job. Suggested yesterday, I think, that Multicoin Capital were rotating like a humongous amount of ETH all into hype. So that, I think, would be my bet that that's what's kind of supporting the hype price, at least for that period of time, whilst the other market was trending down. And unless there's someone like that doing that every single day, and there is hyper strategies as well, right? Hyper strategies is one of the DATs that is continuing to accumulate hype. But I have to think that it can't defy gravity all this time. And that doesn't mean that we don't think hype's brilliant, as we say many times. But if you've got something to sell, it's Bitcoin and hype. I think that's what people are still holding, and God forbid you're still holding ETH. But maybe some people still have some of that to sell. Ledge, final thoughts here.
Yeah, I'll share 2 more ideas from the YouTube chat, which has been super active today, by the way. Wirehead X is saying that the good tokens usually go down last, and Diablo made the point that was regarding to the meme conversation, though, that Binance doesn't have any memes to sell. And look at what happened when silver hit Binance.
As soon as things hit Binance, they just go down at the moment. Like I don't know what else to say. That just seems to be the case, right? I think they offered they just started offering the other day. They started offering Tesla perps as well, and they started to do some equity perps, I think. And so I'd love to see at what price that was. It was at least 440, I think, or maybe 430. And Tesla's down. Tesla's down to almost 400. Ledge. What do you think about Tesla there?
I'm still holding my Tesla bag for the time being.
I mean, you bought the dip though. So you're in early, right? So you're not underwater.
Yeah, I'm not hurting at all.
I'd bought at 440 and then sold because I'm still like figuring out my stock strategy, to be honest. I'm in oil, I'm in oil stocks and Intel at the moment, and energy. So that's my thing. Tesla, yes, I want exposure, but there's just so much going on. I just feel like I had to get out of the way of the market. You know, how am I supposed to figure out what Elon's up to when he's like, right, I'm going to take XAI and then it's going to be purchased by SpaceX and then maybe Tesla's going to buy it whilst all this is happening. I'm in a court case with OpenAI and the market's selling off and Nvidia now isn't going to invest in OpenAI. That $100 billion investment is maybe not going to be 100 billion. Like, I don't know. I'm just getting out of the way. And historically, I've been very good. And I think this is one of the good things about surviving, or when you not only, yeah, I mean, it's not just about making money here. It's about getting out of the way of things that you don't know. Let the market go down if it needs to go down. Get out of the way of forces that you don't understand. CZ and Jeff from HyperLiquid, like fighting between Asta and HyperLiquid. I just got out of the way. I don't know what's going on here. It doesn't feel very good. I don't want to catch any strays or get hit by the debris of this war that's taking place.
One more point on that, because it perfectly echoes what VX Crypto also added in the YouTube comments. Memes are a relatively safer asset class because they are not controlled by VCs and institutions, less insider dumping risk, no execution risk, and can offer obviously insane risk to reward potential. But if you think about like just the massive outflows, massive institutions selling BTC, Vitalik selling ETH, you don't have this institutionalist pressure, sell pressure with memes at the moment, because everyone who wanted to insider dump once something new came up and we had a meme coin season already did that. So we are left with a different structure of holders.
I really don't mind that take at this point in the market. I really don't mind it. Like something like Pengu, which has dipped now to, I think it's 500 mil FTV. I was looking at it this morning. Again, it's a little bit, it's obviously mimetic. You've got no ties to equity. And that's been one of the issues with a lot of these tokens, right? People want equity, I think. People like equity. The risk reward does start to get pretty good on the blue chip memes, as you might describe them. Doesn't mean I'm pulling the trigger here necessarily, but the risk reward is starting to get better than it's ever been. And specifically because I think those investor unlocks might be done for some of them. Like if Pengu is fully diluted now, and I don't know if it is, you need to double check the numbers. But if it is, that's starting to look a lot better, in my opinion. But you need to check the FTV as usual. So, look, interesting conversation to start. As we said, sometimes these days are pretty difficult. If you're going through a harder time at the moment, some things that we have said on the shows, find people who are going through the same thing. Our Telegram chat is a great place. I think some people have been sharing some challenging stuff, strategies, ways to get around it and continue and survive in the hardest times. There are always ways to continue to participate. And I guess the most important thing is to survive. It's hard. We've all been there at some point. We've all drawn down more than we should have. And it's hard to manage it on this side of it when it's already happened. The best thing is to manage it before. But, you know, you've got to survive, and you will. We will. That's the objective, at least. Ledge, got to get into the headlines then today. We've got 3 important headlines, I think, kind of emblematic of where we are in the space at the moment. So price is down, Tether maybe failing with its valuation aspirations, and then people leaving crypto. So let's talk about it. Let's get into the first one to get into the main assets. What do we need to know?
Yes, absolutely. Let's start with taking a look at the stock market. S&P 500 is down 0.5% over the last day. If we, however, look at Finviz, we can see that tech is the sector which is down quite significantly. We have Nvidia being down 3%. We have AMD being down 17%. We have AFCO being down 3%. MU Micron Technology, that is being down 10%. So semiconductors are suffering, are having a really bad day, especially a bad day for AMD. But also Google, Amazon, Tesla, Meta, all of these companies are down anywhere between 2 and 4% almost in the case of Tesla. What we're seeing on top of that is a fair amount of volatility on the gold and metal side. Gold is down to 4.8K. Just yesterday, we had the main headline that gold did reclaim the 5K mark, but it is down a couple percent over the day. Silver, however, is impacted more strongly. Silver is down almost 10% on the day, down from 84 to $77. And the crypto market, as we said at the start of the show, is very, very weak for the majors as well. BTC 69K, 69.5K, ETH just $50 away from falling under 2K. And there's been an interesting article in Bloomberg that I wanted to touch on. Let's get that up. And it has to do, it's going to connect to the stock market in a second. It has to do with Anthropic and an AI tool sparking a sell-off from software to the broader market. So this basically is referring to the bundle of open source tools that Anthropic had released end of January that was for Claude Cowork. And one of the bundles also including, that you will find interesting, the legal analysis, legal tooling kit. And that, according to Bloomberg, sparked a $285 billion sell-off in stocks across software, financial services, asset management sectors on Tuesday, as investors were racing to dump shares with even the slightest exposure in that. And more specifically, Goldman Sachs basket of US software stocks sank 6%. That is the biggest one-day decline since April last year, when we've seen the start of the tariff wars, which Trump had started back then, the sell-off that we've seen back then. And obviously, that in itself then caused the entire NASDAQ to be down anywhere between like 1.6 to 2.4%. But I found that interesting that this software as a service, SaaS apocalypse, how they're calling it, is driven so much by AI fears, by Anthropic, and by just watching what is coming out from the main LLM providers, what stocks are or which stocks are affected by that, and then also panicking and selling that off quite intensely, quite rapidly, which is telling me that, well, makes me think that the market has been very, very strong, has obviously hit multiple all-time highs. S&P went to 70K, but is not in this bullish mood anymore, is more now in this wait and see position, and very, very anxious and very sensitive to news like that, where you have a $300 billion sell-off, according to this Bloomberg article, as a result of Anthropic coming out with some new open source plugins for Claude Code, Claude Cowork.
Very, very interesting. I think it's right to bring up Claude. I think it's right to also, in the same breath, talk about OpenAI's struggles. We spoke on the show the other day about how something seemed off, even in that conversation around creating a social media platform that's going to use the orbs and WorldCoin to verify people, to create an alternative to Twitter because of all of its bot problem. That's just one part of its struggle, right? OpenAI's, where something just has seemed off there in terms of leadership. People are leaving, they then come back. It's a little bit messy. And we did appreciate on the show the other day that fine, maybe when you're at the cutting edge and leading edge and there's so much money involved in the formation and starting of these companies, it can be a bit messy because incentives go crazy. However, even on the product side, they used to be number one. They're the ones, they are the verb. They are, instead of Googling something now, you can ChatGPT something. But increasingly, obviously, you've got Claude. I don't know if you saw, Ledge, the Claude advertisement yesterday, which went viral. I don't know if we can get that up for a second. We don't necessarily need to watch it, but even just having it on the screen, if you haven't seen some of the advertisements, I believe they're going to be, I don't know if they're going to do all of them at the Super Bowl, but Claude produced some pretty spicy takedown advertisements. They don't name OpenAI in the advertisements, but they do clearly imitate OpenAI and go after them for the fact that they've said they're going to have to do ads in OpenAI as part of their business model, where obviously Claude does not run ads. And they're pretty savage. They're pretty savage takedowns of, well, the phrase that they use saying ads are coming to OpenAI. Sorry, they don't name OpenAI. They say ads are coming to AI, but not to Claude. With that obviously being the shot across the barrels to OpenAI. So the reason why I think it's so bad is because so much money's gone into OpenAI, and so much money is getting spent in that arena that if one bubble starts to pop, I think people might just have to re-rate everything. I really don't think that means that this stuff is not super valuable. I think it is really, really valuable, but maybe some things have just been misallocated, and maybe some people will not be the winners that they thought they were. One of the ways I expressed this was being short Oracle for a long time. I think Oracle was as high as 180 when I got into the short. The way I short, I need to get better at just holding them, but shorted at 180, got out at like 175, shorted again at 175, got out at 165, shorted again, and got out at like 160. And I think it's down to 145 now because Oracle are hugely exposed to OpenAI. So I thought that was a good way to get like OpenAI exposure to the downside if you were bearish on some of the developments at OpenAI. So I thought that was a good little play. But yeah, I saw a very good take as well recently, which is that a lot of the big techs spending, well, they've obviously spent a tremendous amount on CapEx, right? They've had to invest so aggressively, almost to become infrastructure companies now in order to support this build out. And some of the money is going to come from not buying their stocks anymore. I've seen a couple of takes explaining how they will not be doing as many stock buybacks, if at all, over the next year or two, because, and in fact, they'll be selling their own equities in order to fund all of this build out, at least in part. So I think the stock market could go through a period of a little bit of sell off, a little bit of a period of having to bob around as people figure out like where is the value going to accrue here. I think it's been a bit of a mad rush for a period of time, and now we really need to take stock of where we are. What do you think about those ideas, Ledge?
Yeah, I very much agree. And I think the AMD, I said it, is down 17, 18% on a day. And I feel like this is exactly the perfect example for that, because what did come out is the Q4 profit. So also then the entire financial year of 2025. And Q4 was a record month for them. They did not have bad numbers. They even were better than what analysts expected them to be. They had a record quarter, but their outlook was weak. And their CEO, she said, well, she did not expect AI to be growing so fast, and now they're catching up with the data center side of things. And this lackluster outlook, and basically what analysts have interpreted as a bit of a, I would say, too slow shift to the AI boom and not being fully emerged in that. That was enough to cause an almost 20% sell-off. I mean, Ark and Katie Wood got in and apparently bought the dip, but it kind of tells you how analysts are looking at the market right now. Like if you're a tech company, infrastructure company, whatever, because you just mentioned that because of that CapEx, you become an infrastructure company if you're in that arena, and you don't go fully all in, even though you had record numbers, the stock market will punish you for that and will sell off 20% in value of your share because you were not committed enough to the cause and your outlook was too weak.
Yeah, one point on this, and again, like we're not necessarily stock experts or even tech experts, frankly, but we are smart enough to just try to get a handle on how these things are working. Just to point out, Google had their Q4 earnings call yesterday, and just one of the key takeaways amongst a variety of takeaways is that they're doubling the spending. Like I think the spending on CapEx surprised the market. It was more than it was estimated to be. And so that's just something to note, right? Like we keep talking about this spending, and it definitely surprised the market. I'm just trying to see what the market did as a consequence of that. So Google was down 2%. It was above 340 yesterday, down to back to 333. Not a well, I guess a big move for a stock like Google, but yeah, I think the market was a bit surprised by how much it was going to be spending, which is kind of the same as the concern across the board at the moment. So I
Just to
believe
give the number, that's 185 billion that they doubled up to. So they were like initially planning to spend 90 billion. They doubled that to 185.
Yeah. And let's see, I think Amazon earnings are today. So let's see how they do it. I would bet it's something similar, to be honest. And if the market doesn't like it because it's just more than they thought, then maybe we head lower a little bit here. Okay, where do we go to next? Like that's an interesting thoughts. Any final thought on maybe portfolio allocation ledge before we get to the next two headlines? As we're kind of suggesting that things are a bit dicey here, and albeit we've been risk off for quite some time. Like, do you want to buy the dip right now on stocks? Do you want to wait a bit? Like, what's your instinct?
Not really. Don't want to buy the. I don't really even see a massive dip in the general stock market.
Yeah.
To be honest, it's still
So
trading super highly.
Dip, right? Yeah.
So I'm still continuing my monthly savings plan on the stock side of things, which will continue to be the boring MSCI world, or all country world to be more precise. But in terms of individual stocks, maybe have a little nib at AMD that I would find interesting, because again, fundamentally they had a record quarter, and that is down quite a lot on the day. So that would maybe be a thing to buy. But apart from that, not really any strong inclination to reallocate or play portfolio games at the moment.
Just some ideas out loud. Like I think uranium is good. And I think it will be, it's going to get dragged. I think everything's going to get dragged for a period of time here, especially if gold can't hold and all of these commodities are getting traded on the commodity side as if they're all the same or they're all meme coins. Frankly, like it's very, very volatile. But there is real structural demand for rare earths and uranium. I think those two things are true. And I think if you can hold spot for those things as part of the dip, if they get kind of involved at the rest of the market sell-off, I think those are more interesting because people, this is a good point I just wanted to bring up before we go into the next stuff. The reason why I think buying the commodities is better is because there's a structural demand across the world that people have realized, damn, we are so dependent on other people for our energy. We're going to need to do something about it. Whereas buying, that's actually why I'm in oil as well. I'm in some American oil companies, and because I think energy is still going to be super important in this period of time. But so uranium might be important for everyone. Whereas in the document, in my kind of tweet segment, I had this bar chart tweet, which is referencing Amundi, which is Europe's largest asset manager with $2.4 trillion in AUM, assets under management, will reduce exposure in the US over the next 12 months. So like, I still don't think we've fully seen the rotation out of the States. I also don't think we've fully seen the rotation into gold because I think people are still underweight gold. So I'm not, as we discussed yesterday, unless anything cataclysmic happens, I'm kind of comfy in the gold that I've accumulated now. So I told you I trimmed a little bit when the proportion got higher, but I'm kind of comfortable now. And I think people will continue to rotate into it as people realize the severity of what's going on in the world, and maybe we're going to continue to diversify. But you've also got this where people are like, okay, we've got too much US. The thing that people are overweight, we were talking earlier about what do people have left to sell? No one's got any memes left to sell because we're already out of it. People have a lot of US equities, a lot around the world. And so talking about people holding a lot of hype, and that may be being something that crypto people might have some to sell if the downturn continues and if people start to feel the pain. Well, people hold a lot of US equities as well. So just thinking through it from that perspective, I think that's got some downside from that angle. Final tech ledge, or should we just roll straight into the next headline?
Let's keep it rolling.
We'll keep it rolling. 2 more headlines to go. Unfortunately, not necessarily better, but I think it's helpful to get a handle on what's going on. So this is on the raising side. This is the news that Tether has retreated from its $20 billion funding ambitions after investor pushback. CEO Paolo Ardino downplays the scale of the $185 billion stablecoin group's capital raise. They had wanted to raise at a $500 billion valuation, and they had wanted to raise between $15 to $20 billion in a deal that would make it one of the most valuable private companies. However, this is according to the Financial Times. Tether's advisors have floated raising as little as $5 billion now after facing reluctance from investors, according to people familiar with the matter. Remember, we spoke about yesterday what the Circle chart looks like, and I don't think Circle is as good of a business as Tether. I think Tether is a better business, but the Circle chart came out of the gate, IPO'd at $30, went straight to 60, went all the way up to 220, and has careered down back to 60 or something like that. So, and meanwhile, in crypto, the stablecoin TVL across the board is first it plateaued and now it's declining. This is one of the greatest indicators for risk in the crypto markets, when stablecoin TVL across all the chains just starts to plateau and starts to stop. As you get humongous inflows, that's usually as risk is coming back and people are ready to participate again. And as it plateaus and goes down, people are exiting. So, stablecoin business, fantastic stablecoin business, but bad time. It's not timed very, very well. So, I guess this is just important because it's indicating the time we are in the market, where this is one of the best businesses in the world, maybe one of the best businesses in the world ever, and struggling to reach the valuation which it hoped. Maybe the valuation was too high, to be honest, but maybe not enough investor appetite. Whereas I'm sure at some point in time in the market, this would have been eaten up as well. So that's that. Ledge, do you have a view on this? What do we need to, any key takeaway from your side?
Yeah, it's another read on the market, right? As you said, if we were in a market cycle or phase where the stablecoin market cap would still be growing, which it has been, which it was for the entire last year, nobody would have minded a $20 billion Tether raise. But now with that scaling or decline plus whatever else is going down in terms of like terrified sentiment in crypto, you just can't do this. So it's a consequence of all these things that they are adjusting the raise to the downside. Nothing else to add on that. But I do see Oxy with his hand up.
Oxy, welcome to the stage, my man. What's your view on Tether, the declining stablecoin TVL, anything in this realm?
Yeah, I really can't blame the investors for pushing back on that valuation. I think we talked about it yesterday a little bit about how if you're a stablecoin company and the only source of revenue is T-bills or this stablecoin vehicle, with Trump in power and like really pushing for these rate declines and things like that, that there's so many headwinds. Obviously, there's regulatory clarity on the horizon. Who knows when that's going to come about? But if everyone's just talking rate cuts, that's your revenue getting cut every single time that goes into effect. So
100%.
I can't really blame them. And like there's obviously a model where you look at a financial statement, there's the revenue and then there's all the costs associated with scaling. So even if, say, regulatory clarity comes through and they issue another $5 billion worth of Tether, if the company can't scale because their margins are so small because of these rate cuts, I can definitely see where there's an inverse here where it becomes too costly to scale to that level, even with this regulatory clarity, because of the rate cuts that Trump's also trying to push through. So I mean I can't really blame that pushback at all. from the shareholders.
Yeah, I think that's very, very fair. It's a great point, right? Even if they have been the best company in the world to date, and you certainly want exposure, ultimately they're trying to raise now, which is after they have been the best company in the world or the most profitable company in the world. And so people are looking to the forecast of what is ahead. And what is ahead is, as you say, a declining rate environment where that hits their margin quite aggressively, especially if they go as aggressive as Trump is indicating. So yeah, I think that's fair. And also, to be honest, I think Tether is incredibly dominant, and I do consider it to continue its dominance. There is a real question mark over all of their business models moving forward as Stripe continues to build its payment rails with its own stablecoin, and as it builds out its own blockchain tempo. How Klarna announced that they're going to have their own stablecoin if you're going to be transacting on their company. It sounds like people are going to go this bespoke model where if you use dollars on their platform, that will be their stablecoin. Why are they going to use someone else's dollars? So there's going to be a huge market for, getting dollars into someone else's ecosystem. And then once you're in their ecosystem, it's their dollars. Like they own the dollars once you're in their ecosystem. So I think I wouldn't be surprised if that's a little bit on the horizon as well, right? As more people try to get into the stablecoin business, which is the same as what always happens when you have supernormal profits at the start of an industry. People are going to come in and try and take 1%, 0.5%, 1%, 2% of your margin, and they're going to need to protect themselves. So I think it's a great take. Ledge, we are wildly behind schedule today. We're not that bad. That was the second headline. We've got one more to do. Why don't you give another shout out to our partner today, and we'll hit the final headline, which I think is also an important one.
Yes, absolutely. Let's take a look at our partner today, Yeet, and our modern market leaderboard. As you said, because we are taking the day tomorrow and our leaderboard is week to week, we're not going to do the giveaway for the typical $500 today. That will still happen tomorrow. We'll announce the winner in the Telegram channel, but still want to take a look to see what the weekly volume is looking like. And it is a very good week. We've seen $117,000 in volume, and Funky has got some competition in this top spot. Funky did his usual 50K in volume, but Dudify is strong in the second spot with a 47.4K in volume. So it might be a toss-up between the two of them because we do some volume waiting for the raffle tickets. And then we have Phonics, JLo, and Atari in the places to follow. If you want to participate in this weekly giveaways, what you need to do is to be signed up with the Modern Market referral link to Yeet. I have posted that in the X comments to the show. We'll also include it in the uploads on YouTube, Spotify, and Apple Music. And do a bet, qualify. Even $1 in volume counts. Like Ollie is doing, I just want to say Ollie is doing a $1 since the start, but this week Ollie did $1.20.
Ooh, 20% higher. Not 20% higher chance of winning though.
Not 20% higher chance of winning. And as always, please do remember to only gamble for fun and what you're comfortable with.
Indeed. If we cannot identify you, which we should be able to, if you're not on the Telegram, we will find you eventually at some point over the weekend or by announcing it on the show on Monday. But otherwise, just a reminder, guys, we've got the Telegram. It is now a one-off joining fee to join. If you want to join, you can send a message to the Modern Market Twitter account, and we can share the details and get you in if you would like to. It's a great place with great people, like-minded people, going through everything that was going on in the market, right? Kind of chatting in there 24/7, people around the world going through the same things as you, probably like-minded. If you like the show, you probably like being in there, but let us know if you'd like to join. And now we've got the final headline. Final headline of the day is this news that Kyle Samani has left Multicoin after a generational crypto investing run. Ledge, what do we need to know here? Kyle was pretty significant as an investor in the industry. What do we need to know, and why do you think this is significant?
Yeah, let's speed run this. As you said, Kyle Samani did step back from Multicoin. He has made quite a lengthy post on that. explaining that after a decade or nearly a decade in crypto, he is more confident than ever that crypto is going to fundamentally rewire the circuitry of finance. He also thinks that the Clarity Act will unlock a wave of new entrants per adoption, unlike anything we've seen so far. He still remains bullish on Solana, unsurprisingly, as he continues to also be the chairman of Forward Industries, which ultimately is holding a ton of Solana. And he also intends to continue to make personal investments in the space, but he is leaving Multicoin Capital. It's also been this second post, even saying that he's aiming to increase his ownership in Forward Industries. And as I said, as Forward Industries is holding Sol, implicitly his personal holdings of Solana as well as a result of this transition. Continues to remain mega long Solana, mega long crypto, continues to be involved with both, but he is stepping back from Multicoin Capital. And I do think that this is a significant piece of news. Obviously, very, very prominent investor in a very prominent VC leaving. Obviously, you won't say that after 10 years in this industry that now you're mega bearish and, goodbye and off you go. But I think it also says that more than anything else, that there's like maybe other pockets of opportunity, other things to do, other things to focus on than actively wanting to invest in crypto and crypto projects right now, because the industry maybe has matured. The rails, the infrastructure have been built for payment to come to the traditional world, for all the banking integrations and all these things. So I think it's more that for this reason, the cards, so to speak, from Multicoin's perspective and from Kyle's personal perspective have been played. He is positioned, and he probably just does not think that this is the hottest place to be a VC in right now. And that is pretty telling.
Completely agree. I think the one of the best ideas we started to articulate, and the reason why I started to sell my Bitcoin in the early hundreds and in the 90s, actually, which is still too late. Ultimately, would have loved to time the top better, because I thought that there was going to be this pot of Bitcoin I was going to hold all the way, forever Bitcoin, all this stuff. I still hold some, but why I started to get out a little bit, because I just started to realize maybe what is being articulated here, which is, well, maybe what was missing from being articulated here, which is that crypto, not only Bitcoin used to represent digital gold, yes, or it still represents digital gold, but not only represented that, it also represented outperformance. Crypto as an industry has represented outperformance for the last few years because it was the hot new thing for the future of the world. That is an incredibly investable opportunity. That is an incredibly exciting environment to operate in, invest in, and participate in. It is not that anymore. A lot of the stuff has been built. Of course, there's going to be more building. There's going to be more tweaking. There's going to be more cool stuff. Still think is an outstanding layer for speculation, and that will continue. But a lot of the core infra has been built, as Vitalik has articulated. Now, a lot of the copy-paste infra that has been being built and which is being pointlessly built needs to go, adapt, change, and focus on like bespoke use cases that are actually going to push the infra forward and actually be unique and have a distinguishing factor. And so this space isn't going to be what it was. It does mean there will still be opportunities, I think, but it also means we're going to have to expand and look at the world and think, what is the next areas of the world that are the next hot things? It's clearly AI, it's clearly space, it's clearly, I would actually argue, this was a private conversation we've had, is clearly AI, it's clearly space, it's clearly the desert. It's not something we've spoken about a lot. I'm in the Middle East now, and you look at the growth that is taking place in the Middle East. Don't forget the desert when you're talking about the future, because stuff is happening in the desert. And I think it's worth keeping an eye on. But one final take here. This was a tweet from Naruto saying, Akshay BD left Solana in crypto. Anthony left ZK Sync in crypto. Carl left Multicoin in crypto. Nader left Eigen in crypto. Some of the smartest people are leaving. The bottom is in, lads. I don't know if that's necessarily the case. Ledge, do you have a view before we close out here? Does this kind of capitulation on the employment side indicate anything to you in particular? Or do you think this time is different?
Yeah, it does, because it's not only these people leaving, it's also a ton of very prominent founders now being more than happy to just vibe code and enjoy the agentic side of things. And maybe one last quick post on that. I'm not going to find it, so I'm just going to speak to it from the top of my mind. It was also from DC Investor, and he was quote reposting Peter Steinberger, the founder of OpenClaw, who basically said, you know, guys, this is why I hate crypto, and shared a message. Peter shared a message which said, oh, you know, fucking hate you, blah, blah, lost money because of you, because you renamed from Multibook to OpenClaw, and now I'm down. Like, couldn't you have stuck with the name a couple days longer? And DC Investor said, basically, this is now the biggest adoption of a retail agentic economy that we are seeing. This GitHub, the OpenClaw GitHub, is growing and getting stars at an incredibly fast pace. And all of these people probably think along the same lines about crypto, thinking that it is a scam. Go to OpenClaw's Discord. If you talk about crypto there, you get instantly timed out and you get banned if you keep on with that, because people do think it is a scam, and this is the representation of that. And DC is making the point, like, if we want to be better than that and talk about the payment layers, the cool things that, you know, Brad, who was saying that yesterday on the show, that agents ultimately need to be able to transact on the blockchain, because that is the more sensible, intelligent way to do than giving them a damn credit card. But we are quite far away from that. If all the smart people are leaving, other smart founders are now turning to vibe coding, and what remains is the people screaming, my Multicoin is down, my OpenClaw Clownbot is down. Why did you rename that? We've seen the same thing with Gaston, right? The founder of Gaston was like super happy about crypto, and then people started insulting him because he's like, oh, couldn't you have supported the token for a couple days longer? You could have made a couple $100K more, bro. Why didn't you keep pumping the price? And he's like, guys, actually, F that. I'm not interested in being associated with crypto anymore.
And good for these founders. Good for these founders who, by the way, because some founders go into it knowingly, and to be fair, those people want to play the game, and then they get burned and try to backtrack out of it. Good for the founders who, like, look, they might not have known. People thrust it upon them, and then within 24 hours, they realize how nonsensical it is, and they just say, no, this is not me. I didn't issue this coin. I don't know who you guys are. You guys are just trying to get rich off my work without paying me anything, even though they might have some tokens to claim. Like, this is not what my business model is. And so, yeah, sure, there are ways to incorporate crypto into a business model, I think, but good for the founders that are just like, no, we're not standing for this. It's very, very difficult to run that kind of business model, I think. But as we say, guys, it might sound a bit bleak at the moment, to be honest, from the various headlines that we spoke about today. Prices down, people not being able to raise the valuations they want, and people, you know, smart, good, hardworking people leaving the industry. I think you're going to have to keep one foot in, and then sure, you explore the next horizons. We started this show as an NFT show. We could not survive as an NFT show. We started to learn crypto much better. We understood that much more. We invested on the angel side. We started becoming, you know, doing some more VC style angel stuff. We have been in crypto on the liquid side, got involved on HyperLiquid a lot. Now we're understanding equity perps a lot. We're in commodities. We're in energy. We're in stocks now. Stocks on chain is super interesting. We just continue to evolve. And I think you can't get into the mindset of thinking, okay, well, I made money on ETH doing NFTs, therefore I'm going to do that for the next year. There's no such thing as an NFT trader, I don't think, anymore. We've always had to continue to evolve as the cycles have evolved, and we'll continue to do that. Crypto's not going to go anywhere, but we'll just evolve as a way, as a show that is investing in the markets, and we'll just add markets as necessary to figure out what's the best way to achieve the financial goals that we're looking for. So hope you find the show interesting as always. Just a reminder, if you didn't know, that we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X video, YouTube, and you can catch us on Apple and Spotify podcasts as well. We hope you have a good day. We will not be back same time, same place tomorrow. We will be taking the day off. We are having a company day, talking strategy for what's going to be coming next. If you want to join our Telegram, DM the Modern Market account. We'll be back same time, same place on Monday. Have a wonderful long weekend. See you on the other side. Bye-bye.